Welcome, fellow YouTubers, and in this video we are going to go over how to identify trends and how to know where the market is going at all times. This also just pertains to basically any market, Forex, crypto, stocks. So we're going to do a different one right here. Okay. So from higher time frames, we have higher high here. We have a lower low here, a lower high here, and then also right here. Also right here, we have another lower low. So this right here indicates, so we take this right here. This right here indicates that it is a downtrend. So in a downtrend, what that means is we are waiting for a correction. So right here, we have an impulse. See right here? We have an impulse to the downside, correction to the upside, and we're looking for sells. So in an uptrend, it is actually, let's see. In an uptrend, it is the opposite. If you look here, let me get rid of this. If you look here, price is making right here. We got a higher high, a higher low, a higher high, higher low, higher high, and then right here, potentially a higher low. So what that means is with an uptrend, we are actually waiting for an impulse to the upside and then a correction to the downside. And then this is where we're actually going to be getting in for a buy. And where you place your take profit, stop loss, all depends on previous lows and previous highs. And it depends if you're swing trading, scalp trading, whichever you are doing. So let me go here, drawings. So we can also right here as well. So what we see here is market on the 1 hour. So this is a smaller time frame. If you look on the daily, it is currently making an uptrend. So it's always good to look from the daily. Let's actually do that right here. So from the daily, we see this right here. It is an uptrend, and now we are having a bit of a ranging motion, a ranging price motion right here. Whereas you go in 4 hour, see it is kind of consolidating right here. Then if you go on the 1 hour, go in the 1 hour, we see a downtrend here. So in this situation, depending if you're swinging, if you are swing trading, you are going to be looking for, if you look, I'll do a separate video on key levels, but just kind of just basically a little intro. You see right here, we have 2 touches right here. So it's key zone, and then it creates a double bottom right here. So depending what price gives us, we could see another move to the downside, because on a 1 hour time frame, it is creating a downtrend, and we could see they go in 2 hour. We could see sort of a triangle. See sort of a triangle consolidation right here, going down to this key zone and then coming back up. So if you are swing trading, you would be looking for a buy around this zone and then with your take profit around here just to be secure, because we see there's resistance here. But if you are going to be what's it called, day trading, you actually read about this area, will be expecting a sell-off right about here. So this is, if you watch the other video that I had made, you can create this to be just, see if it'll pop up. We'll go into, all right, so I'll just change it back just the regular zone because I want to see it in the hour. All right. You actually want to see price come up about here, and then what we will do, we will see if price is resisting at that zone. If it is not, we do not want to get in for a buy because price can just break up right above and just keep moving its way up. But we will see about what price is doing around this zone. We want to see what price is doing around this area right here, and then we get in for a sell to then potentially to go long where our take profit is about here, and then we go long from here up to here. So that is just, just basic, higher highs, higher lows. But it also depends which time frame you're looking at, because once you get to, you can assume if you go into a smaller time frame, you're going to see an uptrend because this is going up. So we go 1 hour right here, you see the small trend. If you go even smaller, you will for sure see an uptrend. And as I said, so basically the time frames do matter. It depends what sort of trader you are. If you are going to be getting in for a swing trade, a day trade, or a scalp, you're going to be using different time frames, and all of that will make the difference. Let me see here. All right. So I just wanted to do basically pairs that aren't Euro or USD. Okay. All right, so we look at 4 hour, and price actually started making a pretty strong uptrend. So the steeper, and basically, yeah, the steeper this trend line is, the more unreliable it is. This is not like a constant uptrend. This is a big push to the upside. So we can be expecting a drop down, and where I would be expecting it, give or take. See a lot of movement here. I would be expecting it here, and to check, I would use Fibonacci, but actually I'll go into more depth with it later. Okay, so this is a 78.6%. It is very possible for it to come down here. I would keep an eye on the 61.8. I don't see much resistance here. I don't see very steady and constant, very like clear resistance. Here I see multiple touches, here multiple touches, and then here as well, and then also touches here, and we have touches here. So I find this one more reliable than actual this area, which doesn't seem to be very strong. So I will talk about how to read Fibonacci retracement areas in another video. So what we see here, we see a 2 hour. Okay. So we see that this is an uptrend because we have right here, we have higher highs, higher lows, we got higher highs, higher lows, and so far. and so on. So you see that for an uptrend, which we want to be getting into a buy, unless you are doing divergence trading, which I'll also talk about a different video. Divergence basically is if it is an uptrend, you're looking for a sell, and if it's a downtrend, you're looking for a buy. Basically going against the market, going against price, just like this right here. This right here, even though it is downtrend, you see this and you get in for a buy. That is divergence trading, because you are going against what price is showing you. And also, if you check the RSI, you can see whether it's actually creating higher highs or higher lows here, and that is how we actually see whether we should be getting into a divergence trade or not. But that is also a video that's a topic for a separate video, which will be done. All right, so we're going here. Let's just do one more. Let's just do gold. All right. So gold, what we've been seeing for quite some time is, see, this is not as steep of a downtrend, it's kind of steady. So what we see here, we go on a lower time frame. We are seeing a bit right here of an uptrend. But it also comes into play with this downtrend that we created from the higher time frame. So what a lot of people will do is they'll actually use both lines to see where the intersection is, and they're going to expect a sell-off here. So even though this is creating right here, we got higher highs and higher lows, and then kind of just like a consolidation area right here, you can expect a sell-off here. You can expect a sell-off here. Around this area, we do see a lot of resistance here. You may even expect it around here, depending what price is doing right now. Also depends on the strength of the US. So if US is strong, we can expect gold to go down, and if US is weak, then the opposite. We're going to expect gold to come up. Yeah. So basically, it's just a quick tutorial on how to identify trend. It is nothing insane. It's just higher highs, higher lows. It's just as simple as just looking at the chart. You don't have to really know anything. You could use your right here your trend line to kind of identify, to make it more clear. I mean, as you see, you just put it from one point to another. You see that it is a downward motion, and from there, it's pretty self-explanatory. I will go into more depth in other videos, but for this one, this is all I have for you guys. Take care.